Broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Adam Welch here with Insurance Agency Marketing Services. Thank you so much for taking some time out of your Friday morning to join us here. We do know your time's valuable, and we certainly appreciate you spending a portion of your day here with us here at IAMS. It's Friday here at IAMS, and that means it's Single Premium Live Friday. So I feel we have a great presentation put together for you. Joining me today is Gary Voith from Baltimore Life, and we're going to be taking a look at Baltimore Life and there are two very competitive single premium life plans out there, the Secure Solutions and the Generation Legacy. Some pretty unique products with a great value proposition. So I feel we have a great presentation put together for you. I feel you're going to enjoy that very much so. As we go through the webinar today, if you do have any questions at all, on your control panel, there's a spot for you to type in a question and send it over. Please don't hesitate to do so. We will certainly stop and get those questions answered, and we'll also check at the end of the webinar as well for questions. So please don't be shy. Ask away if you have any questions. Additionally, through these first introduction slides I'll be going through shortly, there are going to be a couple of poll questions, and your participation in those poll questions greatly appreciated. Helps us get some additional information on some relevant topics out to you if you'd have interest in seeing a bit more on any of those topics. So your participation, just very simple yes or no questions, but your participation is certainly greatly appreciated. With that, before I hand things over to Gary to walk us through Baltimore Life, want to just take a few moments. As always, there's always some new names here and some familiar names on these webinars. So want to take a few moments and just make sure everyone is well aware of all the great services, incentives, and rewards we have available through Insurance Agency Marketing Services for you all to take advantage of out there in the field. So with that, the first couple items I want to visit about are a couple of great business builders. And the first one is our Referred Producer Bonus Program. This is a great program to get some extra money in your pocket, some extra cash in your pocket there. So just like you all out in the field, the most qualified lead you can receive, the highest compliment you can receive is a referral. Same holds true for us here at IAMS. So all the marketing that we do, nothing beats the quality lead that we receive from you, an already producing agent with us here at IAMS, passing along folks in your network, colleagues that you may work with or have worked with in the past that aren't currently working with us here at IAMS. We want to encourage you to make that introduction and refer those agents over to us. And with that, we do have a great bonus program for you to take advantage of to reward you for passing those names along. So how this program works, basically anytime you refer over an agent that's not currently working with us here at IAMS and they contract with one or more of our companies, we're going to cut you a check right off the bat for $50 just for referring them over, and we get them contracted. From there, once that referral starts writing business, you're going to get $100 or more based on the business that they write. So basically some rough numbers how this program works. Any business that referral writes with us, you're going to earn a 20 basis point override on that business just for making that introduction. So let's say in this example here, you refer over three producers, and all three of those producers are $1 million a year producers each, and combined annuity and single premium life to keep it easy here. That equates to an extra $6,000 cash in your pocket simply for making that introduction of those three individuals over to us here at IAMS, passing their name along, saying, hey, I think you should reach out to John Smith out there, great producer, would benefit from working with IAMS. Simply by doing that, that would have equated to $6,000 cash in your pocket. So a great opportunity to get some additional cash out there. Please keep that program in mind when you're out there, and please don't be bashful in passing referrals along to us. We certainly appreciate that and want to reward you for that. Quick note, that 20 basis point override, that's not coming off the top of your referrals commission or your commission. That's coming directly out of our pocket to you as a thank you for that. Additionally, we do have a marketing reimbursement program here, and a great one at that. Basically, this is an opportunity to cost share, for us to cost share in your marketing expenses that you incur out there in the field. So based on the level of business you write with us, we set aside X amount of dollars in marketing reimbursement account for you. The more you write with us, the more that account grows. And as you incur marketing expenses, be it something simple as needing new business cards, or hosting a seminar or a client appreciation event, or you do a mail drop, whatever the case may be, as long as it's geared towards marketing yourself and building your business, send us the receipts for that, and we will cut you a check for up to half of those expenses based on what you have in that account. So a great way to cut your marketing expenses in half when you're working with us here at IAMS with your life and annuity business. For those of you new to us here at IAMS, and perhaps for those referrals that you may be thinking about, we do have a great new producer bonus program here for you to take advantage of. This program rewards those of you that are new to us here at IAMS, not necessarily new to the field, but new to us here at IAMS, rewards you for the business you place with us during your first 6 months of being contracted with any one or more of our carriers. So how this program works, there's 3 levels you can choose to cash in on. Once you choose to cash in for that new producer bonus, the program is done. But based on the level of business that you write with us in your first 6 months, you can qualify for any one of these great rewards. So starting quickly here in the upper left-hand corner, we have our $100,000 level starting out. Write $100,000 in single premium life or annuities or combination thereof, and even target life premium for that. You can qualify for one of those 3 rewards. Most popular there is going to be the $750 cash bonus, but we can also build and create your own producer website and pay that subscription fee for 2 years for you. Or you can choose a latest generation iPad, certainly another popular option out there. If you have more than $100,000 in your first 6 months and you can hit that $300,000 level, the rewards get a little bit better there. So you can see we do have a Social Security marketing program that comes with a 3,000-piece mailing to get some additional leads coming in, help you build your business a bit more. We can boost your marketing reimbursement account with a $2,000 infusion there, or that $750 cash bonus goes up to a $1,500 gift card. If you can exceed that $300,000 level and hit $500,000 in production in your first 6 months, rewards, of course, get even better. And here we have a couple of great business building rewards you can choose from. Matt Gill and Dave Pimper, 2 of our elite producers, qualify for all of our top producer summits. Really top level advisors with us here at IAMS. They have built their business around seminar marketing. It's still a very effective approach out there, and they have developed very effective seminar systems that has allowed them to build their business to the level it is today and maintain that business. So 2 very different seminar approaches, but both very effective. So you can take a look at Matt Gill's and choose his system. Comes complete with a 5,000-piece mailing to fill that seminar and some tremendous seminar coaching with Matt Gill to help you deliver that effectively. Alternatively, you could choose Dave Pimper's seminar that comes with a 4,000-piece mailing and some equally as great coaching with Dave Pimper as well to deliver that effectively and convert those attendees into leads and clients. Alternatively, if you hit that $500,000 level and you want to go away on vacation, get some rest and relaxation, you can customize your own getaway with our Ritz-Carlton travel package. So that is our new producer bonus, again, rewarding you for your production, for those of you new to us here at IAMS, for your first 6 months of production. Our back office support, service is something we really hang our hat on here. It's what's kept us in business and thriving for 32 years. We know your job out there in the field as an independent advisor is not an easy one. There's a lot that falls on your shoulders, a lot of responsibility. We realize that, and we want to help you shoulder some of that responsibility here at us here at IAM. So we want to help you work smarter and not harder and be more efficient out there in the field. So we provide what we like to call full support from submission to commission. So we are here to help you on the pre-sales, sales support side, helping you with case design and product selection and running quotes, getting everything put together that you need to write the case and present the case and write the case. Once the case is written, submit it back into us. We have a very talented team of new business folks that will scrub your applications for you, make sure they're going to be in good order before they hit the carrier. If it's a fully underwritten life insurance case, we will also order your exams and labs for you, so you don't have to worry about that. We can take care of all of that out of our office. We will even follow up on 1035 exchanges for you and keep pushing the carrier along to make sure that your case isn't getting dropped by the wayside, make sure it's moving through the system as quickly as possible so we can get that case placed, paid, and get you paid as quickly as possible. So full support from submission to commission. That is really our story here and what we pride ourselves on. Again, it's what's kept us in business and thriving for 32 years now. We do also have a full creative marketing department here. Tasia Peterson and Josh and their team do a tremendous job in the creative area here. So we can assist you on some different marketing fronts here, from turnkey solutions with brochures and flyers that are professionally written, ready to go. We just need to customize them with your information, and they're ready to be printed or emailed out, however you want to deliver those. But some really neat tools that are already pre-written and ready to go. They can help you with full agency solutions and helping you build a brand around your business and help you with logo design and get that logo and brand messaging out there on your business cards and stationery and different advertising pieces. And we can also assist you on the digital marketing front, everything from email marketing to social media marketing and things of that nature, along with personal websites and creating the website and hosting it for you and maintaining it. So that is our creative marketing department. There's a lot that those folks are capable of, do a tremendous job. If you're already producing with us, chances are a lot of these services are going to be available at no additional charge. Our goal here is not to make money. You'll find that our pricing is very competitive with what you may find at your local advertising or PR firm. Our goal for creative marketing is not to make money off of that. It's to help you get your message out there and get you in front of more people so you can write more business. Then we all win. So please keep that in mind. If there's anything we can assist you with, please give us a call and ask to speak with Tasia or the creative team. They'd be glad to visit with you further. Our website, really a tremendous resource out there for you, www.imsinc.com. A lot of information available out there. If you haven't registered, certainly encourage you to go out there and register today to get access to all this information. We have term quoting engine, had a frog in my throat, had a term quoting engine out there where you can run your term quotes. We have a forms engine, so it's always available 24/7. Of course, it's a website, so if it's after hours and you're in a pinch and you need a quick quote or you need a application packet for an after hours meeting and we're not around, you have access to all of that on the website so you can continue doing business as usual. We do also have a comprehensive sales resource library out there that has really just a wealth of information, from different fact finders and planning guides to use to different client presentations that are ready to go and implement in your business, and calculators for all kinds of personal situations. So great information out there. Again, imsinc.com. Encourage you, if you haven't already done so, to go out there and register to get access to all this as quickly as possible. We do have a tremendous software program here called the Retirement Analyzer, and this is a full, really planning software that can help take your business from more of a transactional-based business to a planning-based business, and really kind of sheds light and illustrates to your clients the power of working with you and implementing your situations. It really shows them how it's going to impact their overall situation. They're no longer going to view that annuity proposal or the life proposal as just a product proposal and you're selling them product. It really fits into their overall puzzle, their overall plan, and shows how the pieces kind of fit together. So it's designed to answer those 6 questions that you see on the screen there. Really powerful piece of software to have in your arsenal to help you close more sales. Marcus Solar in our office is the point person for the Retirement Analyzer. If you'd like to learn more about the software and how we can make it available to you, please don't hesitate to give us a call and ask to speak with Marcus regarding the Retirement Analyzer. IMS Wealth Management. This is going to bring us to our first poll question of the day. Very simply, would you be interested in learning more about IMS Wealth Management? But for those of you not aware, we do have a full registered investment advisor here in IMS Wealth Management. So we can no longer assist you in the life insurance and annuity lines of your business, but now we can also provide service and an outlet for you to handle fee-based asset management. If you're a current advisor with assets under management, we have a full transition program put in place to help you transition your business to IAMS Wealth and our platform very seamlessly, help you be more efficient out there. Again, that's our whole goal, is to help you be more efficient out in the field, whatever line of business it is. So our platform, we feel, is very competitive in the sense from not only payouts and fees, but also asset management and the actual daily operations. So our platform is designed so you can focus on the things that matter most to you, and that's going out and meeting with clients and prospects, building those relationships and gathering assets, and not getting bogged down with the back end items like the daily trading and actual management of the funds through our partnerships. We can shoulder all that for you, so we'll be your full operational arm while you focus on, again, building those relationships and gathering those assets. For those of you not currently in the fee-based asset management side, but possibly exploring getting into that business, we have a seamless onboarding program where we can get you prepared to study for the Series 65 and pass the Series 65 exam, get you registered with IAMS Wealth, and get you jump started in asset management and getting out there and revisiting with your clients and introducing them to this new line of business. Number of reasons to consider adding asset management to your business. Among them, going to be increased revenue. It's another stream of revenue for you. It's going to be predictable income rather than the transactional commission-based income. So you're going to earn fees based on the assets that you have under your management, and those are going to be recurring fees. In addition to the fees from those new assets, you're also more than likely going to see a nice increase in your insurance business and your fixed and index annuity business as well, because you're going to be more of a holistic advisor to your clients and prospects. That's going to go a long way into improving client retention and strengthening those client relationships, because you're able to help your clients with more of their whole picture. You're being more holistic, and you're no longer just their insurance agent or the agent that can help them with guaranteed income. Now you can help them manage their wealth and preserve that wealth instead of seeing that business roll down the street to the next advisor. So that's IAMS Wealth Management. Charles, our hiring in our office, be glad to visit with you. Kind of heads up that team. He and Mike and Joan do a tremendous job back there. But if you'd like more information, I encourage you to click yes on that poll question. We can get some additional information out to you following the webinar. But if you'd like to speak with someone directly, Charles or Mike would be more than happy to visit with you on the wealth management side. All right, so with that, this is going to bring us to our second poll question of the day, and that's regarding our all expense paid life and annuity academy. Give me just a moment here. All right. So very simply, would you be interested in learning more about our Life and Annuity Academy? Clicking yes to this poll question does not bind you to attending. It just simply indicates that you're interested in staying up to date on the next dates and getting some additional information about it. But folks, can't say enough good things about these training events. We usually hold 3 or 4 of these meetings per year. They are all expense paid, so we'll take care of all your flight, travel, meal expenses, lodging. All of that is on us. It just costs you 2 days out of your time. We know that's expensive in and of itself. That's 2 days that you're not going to be out there in the field meeting with clients, making sales, and building those relationships. So we want to load you up with as much information as possible during these 2 days. This is not really like any other training event you may have attended with other organizations in the past. It's certainly not a product roadshow where we bring in carrier reps to talk about product A versus product B and why you should sell their product. While there is some product training information, these meetings are really focused towards marketing and sales concepts and giving you some tools and ammunition to take out there and implement in your business to help you boost your production in the life and annuity market. So we bring in several of our top producing advisors, Matt Gill and Dave Pimper, that we saw on the new producer bonus slide. They will be out there previewing their seminar system and talking about implementing seminar marketing. We'll have other folks out there going over some unique trust products and some niche products that have allowed those advisors to get into the door of new prospects and solidify the relationship and how that opens the door to more sales. We'll talk about, of course, the current annuity industry trends and threats to the industry, talk about the DOL. Certainly still a hot button topic out there. Go over different large life case marketing concepts, so your business insurance concepts, be it key man, buy sell, executive bonus, traditionally higher premium life cases out there. Talk about ways to get you in front of those and help you close those more efficiently, along with wealth transfer strategies utilizing single premium life. So great ways to incorporate, products from, say Baltimore Life into your business for that wealth transfers topic. And then also go over some different software tools out there, including the retirement analyzer. So the point I'm trying to make here, I'm rambling, but a lot of information that we throw out there at you. And our hope is that one or two of those items are really going to resonate with you, that you can take back to the office with you following that meeting and implement in your business and see a measurable increase in your production in the life and annuity markets. So if it is of interest, certainly encourage you to click yes on that poll question. That'll get you on the list to stay informed of future Academy dates. We'll keep you in the loop on that and talk about ways that we can bring you in. So with that, I'm going to go ahead and close that poll question out and keep us moving here. I'm starting to cut into Gary's time. So one item I want to visit with before I hand things over is our recently announced 2019 Marketing Summit. So just got everything finalized, and in 2019 we will be taking qualifying advisors that are invited out to the Ritz-Carlton in Naples, Florida. So should be a tremendous event out there. Get some relaxation by the beach, great education. It's going to be August 25th through the 29th, 2019. We are currently in the invitational period here. It started January 1 this year, runs through June 30th. So you can see the typical production requirements to qualify for that trip. Any combination of those, and really anything you write with us here at IAMS is going to qualify, get you credit towards that top producer marketing summit. So great location. Keep that in mind. Let us know what you're working on that we can help you out with. Get in the door and help you qualify for that trip. So with that, I'm going to go ahead and wrap up and hand things over to Gary here from Baltimore Life to talk about the very competitive single premium life products. So with that, Gary, you should have control.
Absolutely. Good morning, I should say, Adam, and thank you very much for the opportunity again with IAMS. Great partner with Baltimore Life for so many years now, and thanks for the opportunity to spend some time with your leading producers here today. We're going to spend a little time till the top of the hour talking about Baltimore Life's tax-efficient asset transfer program, which really features two products in our portfolio, our Generation Legacy and Single Premium Whole Life product. Both of these products are really designed with your senior clients in mind who have what we like to call some leave behind money, money they don't need to live on. They simply want to leave behind, creating a legacy essentially for their families, increase their estate value, and do it in a tax-efficient way. So no matter whether you've got money coming from after-tax cash funds or from annuities or qualified funds, we have a product that can satisfy those needs for you and your client. Let's talk a little bit quickly about the marketplace. It's huge. About $1 to $3 trillion in wealth is being transferred each and every year, and that's happening and expected to happen between now and the year 2052. We know that about 55% of your clients' wealth is being passed along to their families at their death. About 16% is moving along to their favorite charities. So yes, 71% of your clients' wealth is moving on to people and organizations they know and love. The question is, are they really maximizing the amount of money they can pass along, and are they doing it in the most tax-efficient way? Well, the first product we'll talk about to solve the need is our Generation Legacy product. And as I alluded to, this product is designed to take single premium dollars, not needed, of course, for daily living, from either annuities or qualified plan funds, 401ks, IRAs, 403bs, and the like. It obviously is allowing your client to increase their estate value, leave a legacy for their family, and do it in a tax-efficient way through the use of life insurance. The issue ages, as we'll talk about, are ages 60 through 80. And by writing one single application with Baltimore Life, we'll be issuing two products that will seamlessly be working together upon issue. That's a single premium immediate annuity that it's funding a limited premium payment whole life product. We'll talk more about that, how that works, but the key is you're writing one app to issue both products, and once issued, there's nothing the client or the agent has to do to make all the benefits work that I'll be reviewing with you. We have simplified underwriting through 4 tables, and of course, we'll be talking about our accelerated death benefit rider. So the market in the qualified segment, about $2.7 trillion of in-force deferred annuities are out there. Over 60% of that money is in the tax-qualified employer plans, and about 35% are in those annuities, those non-qualified deferred annuities that you're selling. So no matter where those funds might be, they are eligible funds for the Generation Legacy product. Now, as you well know, many of these annuity products that you're selling, clients really are just looking for an accumulation vehicle. Accumulate funds, do it tax efficiently on a tax deferred basis, get a good rate of return, but they're never really looking to use it as an income source. They're just simply trying to build wealth and then eventually pass it along. So we know that, you know, at age 70.5, of course, you're going to have required minimum distribution. That's going to happen. And of course, when they die, I should say, they're simply going to be passing the taxation on that gain along to their heirs. Now, if the money is coming from a qualified plan, there lies a great opportunity because, as you know, the baby boomers and going younger, there's really not many defined benefit pension plans out there anymore. People are going to look for ways and need your help in distributing funds for retirement. And then, of course, there's going to be parts of their accumulated wealth that they'll look to just simply pass along as a gift or a legacy to their family. Great way, again, using Generation Legacy to take some of those qualified funds to help them pass along wealth more effectively and in a greater amount. So conceptually, how does Generation Legacy work? I want you to think of Generation Legacy conceptually as a gift your client's going to pass along. And inside that gift box, you're going to help facilitate the transfer of money from annuities and qualified funds. That money is essentially going to be transferred into a qualified SPIA that will be used to pay premiums on a life product. So again, you're going to write a single application. We'll issue 2 products, a SPIA and a limited premium payment whole life product. Now, over a period of either 7 or 10 years, depending on the issue age of your client, Baltimore Life will automatically make annual premium payments from that SPIA to pay premiums on the life product. What dictates the payment pattern? It's the issue age. If a client's 60 to 74, we'll issue a 10-year payout on the SPIA along with the 10-year limited premium payment whole life product. If their age is 75 to 80, a 7-year payout on the SPIA along with a 7-year paid up life product. But here's where the benefits really get rich in this product, and that is, what if the client is going to die in the early years while the SPIA is funding the life insurance? Well, we know that the life insurance will always be paying an income tax-free death benefit to the survivor that's greater than the single premium paid. But with our product, in addition to that, your client's beneficiary will also receive any remaining payments from the SPIA that were not used to pay premiums on the life product, again, through that 7 to 10-year period. So the beneficiary is receiving both. We'll talk more about payouts in just a moment. So at the end of the 7 or 10-year payment, the life product basically now becomes fully paid up. The SPIA goes away, it's done its job. And that life product will continue to provide an income tax-free death benefit, cash value growth on a tax-deferred basis, and yes, the accelerated death benefit riders that we'll talk more about. So just to recap, the issue ages are 60 through age 80, and we do base our pricing on current age or age at last birthday. Now, the reason this is important, as you know, is that you're going to be dealing with the transfer of funds from other products and institutions. That transfer process may take 20 to 35 days, and we will issue the policy based on the age your client is the day we receive the funds. Excuse me, minimum premium is only $5,000. How many clients out there have multiple annuities with you that are getting past the surrender period at different points, and their only goal is really to let that money accumulate, right? What if you talk to those clients who, instead of just accumulating wealth, they can significantly increase the amount of money they're able to pass along by transferring it into the Generation Legacy product? Great opportunity for a prospect. The maximum face amount that we'll issue on this product, on the life product, is $450,000. That's based on the single premium paid. Underwriting classes are non-tobacco and tobacco, and within those underwriting classes, we'll issue any risk standard through Table 4 using our simplified underwriting process. Cash values, they accumulate on a cash values accumulate on a non-participating basis, so there is a guaranteed cash value growth. Partial surrenders, they are permitted from the life insurance product, but after the life policy has become paid up. That's 7 or 10 years after the life policy becomes paid up. Loans, they can be taken out at any time from the life policy cash value at a maximum interest rate of 8%. So now let's talk about that accelerated death benefit rider, because these truly can be living benefits to your client, as you know, at a time when it's needed most. They're certainly not a long-term care policy, but as you know, many of your senior clients are prohibited from buying long-term care insurance because it's so expensive. Isn't it nice to know that they can accelerate their life insurance benefits in this type of product based on certain health event triggers? The 3 health event triggers that are used to accelerate the benefit are terminal illness, confinement to a qualified nursing home facility, and in situations of extended care, home health care, and adult daycare. Upon the decision to accelerate, by the way, which can happen any time after issue, a lien for the amount of money taken will accumulate against the death benefit at an annual interest rate of 8%. Now, the maximum that can be accelerated is $250,000. The minimum is $5,000. But here's the good news. This benefit is paid out once. It's paid out in a lump sum, and these are unrestricted funds. The client can use these funds for whatever reason they deem necessary. We'll talk more examples of how these payouts work in just a moment. So now let's talk about the triggers and the definition and the percentages of payout. The first one is terminal illness. Simply put, the client needs to be diagnosed by the doctor as terminally ill with a life expectancy of 12 months or less to live. And in this case, they can take a maximum accelerated benefit of 75% of the face amount. The second rider covers both qualified nursing and extended care situations. Here, they can accelerate up to 50% of the face amount. So for the qualified nursing home definition, simply the client needs to be chronically ill, diagnosed as chronically ill, confined to a qualified nursing home facility continuously for 90 days, but with the expectation of a permanent confinement. For the extended care situations, again, they need to be chronically ill, have been so for 90 days, but now they're requiring care provided by either a licensed home health care agency or a licensed or state certified adult daycare center. In both these situations, again, they can accelerate at a maximum rate of 50%. Now, I will tell you that based on certain states, there are certain limitations to those percentages. About 7 states, I think, that have different payout percentages. So these are the maximum rates. Those state variations are covered on our state approval charts for this product, which can be found out in our product toolkits on our agent website. So we talked about chronic illness as it applies to qualified nursing and extended care situations. What do we mean by that? If the client satisfies either of these definitions for chronic illness, we would consider them to be chronically ill. The first one is they can't perform 2 out of 6 activities of daily living. Maybe they're okay on their ADLs, but they could be suffering from a severe organic mental illness, such as Alzheimer's or dementia. In either case, we consider them to be chronically ill. So let's look at some examples of potential payouts. Here's a client who has a $100,000 face amount on the life product, and they're going to decide that, by the way, they're terminally ill in this example. They're going to decide to accelerate at a maximum rate of 75%. So they're able to get the $75,000 in cash anytime after issue if they're considered terminally ill. The lien would be established by taking the $75,000 that we advanced them plus a $100 service fee. So the lien's established up front at $75,100. Now, if this client were to die immediately after getting that cash payout as a living benefit, we would simply take the death benefit of $100,000 less the original lien, giving you a remaining life insurance benefit of $24,900. But the more likely scenario is probably this one. That is where they got the cash payment up front. The lien was established at $75,100, but now they die 1 year after getting that cash. So now you would add 1 year's worth of interest against that lien, giving you still a remaining death benefit of $18,892. Now, in this example, the client would have to live 4+ years in a terminal condition for the interest to outrun the remaining death benefit. Extremely unlikely, I'm sure you would agree, that that would happen. So could these riders, these terminal illness riders, as well as the qualified and nursing home rider, could they potentially terminate from the life policy where they're connected? Well, technically they can. Here's how. What if the life policy ends? And you might think to yourself, well, hold it. If the premiums are automatically being paid each year from the SPL to the life product, how would the life policy end? Well, technically, they're still two separate contracts. We are administering the payment to make sure they're paid up after 7 or 10 years. But if your client came back in 2 years after they started this and said, hey, I need as much money back as I possibly can get because I didn't think I would, but now I do. So they would have to cash out the life policy, which would have very little cash value in it. But the remaining payments from the SPIA would then either be paid over the next remaining number of years. So if they were 2 years into a 10-year payment stream, 8 more years of payments could be paid. They could also take a commuted lump sum. So another reason would be, what if the insured dies? Well, we would pay a death benefit instead. We wouldn't pay the rider benefit. And finally, what if the client accelerates, let's say, under the nursing home provision and gets 50% of the face amount? You can only accelerate it once, so you can't come back and accelerate a second time. The riders would end. The other scenario that I already outlined here is, what if the client who accelerated under the terminal illness rider, for example, the interest outruns the remaining death benefit. They live 4+ years in a terminal condition. Very unlikely, but it could happen. In that case, the contract is set up that the owner may repay part or all of the lien at any time, just to keep this qualified as a life product. Keep in mind that even though you accelerate a benefit, there's still cash value in the life policy that's accumulating tax deferred. And if you have an accelerated benefit going on, you cannot also exercise a policy loan. You have to have one or the other. The last thing to remember is that no matter whether you're working with our rider or any company's rider, that you should always tell your client to consult with their tax advisor. So let's look real quickly at a summary of a potential payout here. Here's a client who has 70 years old, non-tobacco user, who had $50,000 in premium. For that $50,000, we issued a life policy of $78,000, nearly $451. So we significantly increased their estate by what? $28,451. Keeping in mind that if they die in the first 10 years, the remaining payments from the SPIA would also be paid. The accelerated death benefit rider, look at these cash payouts that potentially could be there if they exercise any of the provisions of the rider. I mean, this is real money to a senior at end of life, and truly it's appreciated benefit because many of your seniors cannot afford long-term care insurance. So let's look at, let's go back one. Let's look at some of the other tax advantages of this product. We feel it has to do with the distribution of the funds and the rollover of the funds. Since you're rolling over funds coming, let's say, from an IRA, where the money's never been taxed before, or you could be rolling money over from an annuity where there's a basis and a gain. Eventually, Uncle Sam is going to have to be paid on the gain, right? One way or the other. But since you're rolling this money into a qualified SPIA that's going to be paying for a life insurance product over a 7 or 10 year period, we're able to spread the tax out on that gain over the same 10 or 7 year period. So yes, the policy owner will get a 1099 each year on the amount distributed that was considered gain, but again, we're able to spread that money out over a 10 or 7 year period. The beauty is the payment we make each year from the SPIA to the life product does satisfy the RMD rules, so that's a good thing. And if death occurs during the period while the SPIA is funding the life insurance, as we talked about, we know the life insurance is paid income tax-free, but the remaining payments from the SPIA would be taxable based on the portion of the funds that have not been taxed before. So please keep that in mind. The other thing to know on the tax side is that on the application, we have to ask the question, does the client want a withholding of tax based on the money they're rolling over? We do have to ask that question, but the way this product has been designed and administered, we cannot make that withholding of tax. So please make sure you check the block on the app that says you do not want tax withheld from the annuity you're rolling over. Otherwise, we have to send everything back to you because the numbers just don't work any other way. So let's look at some premiums to death benefits. And I want you to be thinking about those clients out there right now who have annuities with you, have qualified funds, have enough money for income from those qualified funds, but they're looking to take part of those funds and pass along to their heirs. Here's the 65-year-old non-tobacco user who has 50 grand in premium. Because they're 65, we're going to issue a 10-year payout on the SPIA along with a 10-year paid-up life product. For the male, the face amount is $77,361 and change, and for the female, the face is $87,031 and change. So what did you just do for this female 65? Well, you've increased her estate upon issue by over $37,000. Pretty significant, right? Also keep in mind, as I mentioned, if she dies in the first 10 years, the remaining payments from the SPIA would also be paid. Now, she may say to you, Adam, what if I left that money in the annuity that was making 3% interest and I'm in a 25% tax bracket? Wouldn't I be better off? Well, it would take her over 25 years in order just to accumulate and match the life insurance benefit of over $87,000 here, right? That's a pretty significant period of time. Keep in mind that life insurance benefit is always there to be paid income tax-free. Here's the 75-year-old, little older, shorter life expectancy, but the numbers still look good. At 75, for that same 50 grand, we're going to issue a 7-year payout on the SPIA along with the 7-year paid-up life product. For the male, the face amount is $61,516 and change. The female is $67,000, nearly $9. So even at 75, you've increased this lady's estate by over $27,000, and for the gentleman, you've increased this estate by nearly $12,000. Knowing again that they die in the first 7 years, the remaining payments from the SPIA would also be paid. I'll tell you this, I'm a licensed agent myself, been marketing this product for Baltimore Life for many years, and what I will tell you is that clients love the concept, especially if they truly have leave-behind funds. Not only will they ultimately buy from you if they are in the right position to, but they're going to put you in a great position to ask for referrals early and often. So make sure that you remember to do that. This screen is now showing you a spreadsheet of, this is kind of a screenshot of our proposal software that you can get out on our website. You can also show this same type of a view right on your smartphone or smart tablet using our MobileLink software. This is showing the female 70 who had 50,000, let's say, coming from an annuity. 40,000 was her basis, her money. 10,000 we started out as her gain. You see in column 3 there, the 50,000 being transferred into the SPIA portion of the Generation Legacy product. And from that SPIA, we'll make an annual payment to the life product of $5,570 a year. In the next column, you see that out of that $5,570, nearly 4,000 of it is excluded from tax. That's part of her basis. And based on the interest factor over 10 years, the estimated taxable income is about $1,571. This is what she'll get the 1099 on. So it's so very important for her to understand that. The life insurance benefit is shown there at the end, $78,451, and next to it is the commuted lump sum of the SPIA if death were to occur early. So this really does a good job of showing the ebb and flow once the client conceptually understands how the product works. What about forms? Well, out on our agent website, you will find an application and forms package. You'll answer a couple of quick questions that will automatically populate for you all the forms that you need to do business with us, as well as instructions of how to get the apps to us, and then also, more importantly, how to complete our very, very high-valued point of sale underwriting interview. It's a required interview so that as soon as you complete the app, you're going to pick up the phone, call our call center, and complete an interview. In about 12 minutes, we're well over 90% of the time, we're going to give you an immediate underwriting decision. Out on our agent website, we have product toolkits where you'll find that app package, but you'll find lots of other great tools out there for you to use. We have point of sale presentation pieces. We have our proposal software, our product guides, our mobile link software, letters, phone approaches, just a number of things. If we have time, I'll show you those today. Let's talk about the second product in the time we have remaining, and that's our single premium whole life product. Similar goal. Client wants to increase their estate value, create a legacy for their family, do it tax efficiently, but there's some key differences. This product, as opposed to using qualified funds, is now using after-tax funds, CDs, money markets, mutual funds, and where appropriate, 1035 life-to-life product exchanges. Another difference is the issue age, 50 to 85, a little broader issue ages because we're working with after-tax cash funds. Underwriting, another difference. We, instead of having one tier of underwriting, standard through table 4, we have 2 tiers. Gives you through table 8. We'll talk about that. And then finally, we still have the accelerated death benefit rider, which is automatically included, by the way, at issue in all states where it's approved. This rider, though, on this product gives you a little bit more flexibility in terms of the payout options. I'll show you that. So again, 50 through 85 based on current age, 2 tiers. It's either not tobacco or tobacco, level 1, which is standard through table 4 again, or we have a second tier for level 2 for table 5 through table 8 types of risk. Another big one is the minimum premium. It's only $5,000, just like Generation Legacy. How many clients do you have out there that have, say, multiple CDs set up at the bank for their kids, their grandkids? It's kind of earmarked money. As you know, seniors compartmentalize their funds. This is a perfect approach to show them a way to pass it on more effectively. How about that senior client who, let's say you're trying to sell some small face amounts of life insurance to, and they say, you know, Adam, I really don't need any life insurance. I have a burial account set up. Well, that means probably one of 2 things. It either means they have a pre-arrangement at the local funeral home, or they might have a $15,000 CD set up at the local bank that their kids know that's the money set aside to bury mom and dad. Well, Mrs. Jones, if you were, let's say, working for a 70-year-old, I'll give you a role play. Mrs. Jones, you're 70. You're going to live many more years. I'm sure you'd agree costs are going to go up. What if I was able to show you a way to take that $15,000 you have in the CD and provide your family with nearly a $25,000 income tax-free death benefit? Oh, by the way, if you became terminal in a nursing home or an extended care situation, you could get at some of that money as a living benefit and help with some of your end-of-life expenses. We could even set it up that, you know, we keep a certain amount of life insurance paid up for your final expenses, and you can still get at some of that living benefit money in your final, you know, as you're convalescing in those final years. So that's called a burial account concept. I can't tell you how many agents get started using that simple concept, selling small premiums, but once they figure out how this product works, they realize that doing a good, effective fact find is the way that you really sell bigger premiums. The average premium we see on this single premium product is about $30,000 to $35,000. The average premium we see on Generation Legacy is about $60,000 to $65,000. So these are big cases, and you can work with IMES to tell you about the commission schedules. The maximum face amount for this product is expressed in terms of the maximum net amount at risk. That's just the difference between the face amount that we issue and the premium paid. These are the maximum net amount at risk limits that we'll issue at. Software won't allow you to violate them, so you don't have to worry about it. Cash values, they accumulate on a non-participating basis. Partial surrenders, here's another big difference. Because we're working with non-qualified or cash funds, I should say, you can take partial surrenders from this product from the available cash value, starting as early as policy year 2 at 10%. 20% in year 3, 30% in year 4. In the 5th year, it's 40%, and from the 6th year on, 100% of the available cash value can be taken as a partial surrender. Loans are still available at any time, but with partial surrenders like this, most people go that route. Accelerated death benefit rider, same 3 health event triggers we talked about before, same single payment of money, one-time payout, and these are unrestricted funds. Here's the difference with this rider. With this rider, you could elect to take what's called full acceleration, or you can do a partial acceleration. We'll talk about that in just a moment. So let's look at the triggers, the terminal illness trigger. Same definition, 12 months or less to live. But if someone wants to take a full acceleration, they can take 95% of the face amount, less a $250 admin charge. Or they can say, you know what? I have a $100,000 face amount here. Let's make $25,000 of it paid up life insurance, and take the other $75,000 of face and accelerate it at 95%, less the $250 admin charge. So that's the ability to do a full or partial type of acceleration. Nursing home provision, again, same definition to qualify. They want to do a full acceleration, they can do it at 90%, less the admin charge. And then for extended care, home health care, and adult daycare, same definition to qualify as I gave you for Generation Legacy, but now the full acceleration is at 80% less the $250 charge. For those of you that haven't sold a lot of the accelerated benefit riders, you might say, well, why are the percentages going down with each of these? It's really based on the cost of money. If we're going to advance money based on prior to death, on a terminal illness basis, we're expecting we're advancing money up to 12 months in advance of their death, right? So there's a cost of that. If you go to a qualified nursing home facility, they're going to live a little longer than that. So the percentages decrease. Finally, when you get to extended care, they're going to live longer yet. They're going to go down to 80%. So it all is a factor of, if we're going to advance money prior to death, how long do we anticipate they're going to live? And there's a cost for doing that. Same definition for chronic illness I gave you before. So let's look at premiums to death benefits here. Here's that 65-year-old non-tobacco user of $50,000. Look at these death benefits. I'm not going to read these to you for male and female. Let's not forget, you got a level 1 and a level 2 here. So that level 2 death benefit at all ages and genders is about $5,000 to $6,000 less than level 1. Not a bad reduction in order to get that type of a payout. So for that female, 65, you've increased her estate value on, leave behind money by almost $43,000. If she thinks that she can do better than 3% on cash money right now, boy, she's going to be surprised. But even if she was making 3% on that money in a 25% tax bracket, it would take her 28 years just to match what you're increasing her estate by, that $43,000. Don't forget the life insurance at over $92,000, almost $93,000 is there to be paid income tax free. Here's the 70-year-old numbers. Still look pretty sweet, don't they? We're significantly allowing your client to increase their estate with money they're simply wanting to pass along anyway, and do it tax efficiently through the use of life insurance. I'm going to jump back here real quick because we have very limited time remaining, and I want to talk about the point of sale underwriting process. This is really the icing on the cake for this program, because once you've completed the application and you're sending it in to us, you can pick up the phone, call our call center, and complete an app in about 12 minutes or less with your client. Basically, we're going to be asking your client the same health questions you completed on the paper app that you're going to submit to us. But when we ask those questions from our call center, we're now getting permission to generate the information that we need to see from the prescription drug database and the medical information bureau. That way, if there's anything conflicting with that data out there as compared to the app answers, we can get clarity right then and there and make a live decision. Once the interview is completed, any underwriting decision, by the way, is not given to your client. It's going to be given to you, the agent. You're the one that's going to communicate an underwriting decision to your client. You control the ball on this one. We'll also give you a confirmation number when we give you that decision that we ask you to write on the first page of the app you're going to submit. Obviously, when the app is done, get it all into us. Now, all the information about how to complete this interview is in your app package that we talked about before that you're going to complete. So things like the phone number for the call center that you see here on the screen, the call center hours, 9 a.m. to 10:30 p.m. Monday through Thursday, as well as 9 a.m. to 6 p.m. on Fridays. These are Eastern times. We do support English and Spanish languages. Other languages are available upon request. If you have a hearing impaired client, we have TTY services in both English and Spanish. Please know, though, that this interview must be completed within 5 business days of completing your app. Now, you might say to yourself, hey, what if I make a sale on a Saturday, or if it's after your hours and your call center is closed? What do I do? Well, no matter when you complete the app, I'd recommend you call that toll-free number, and when you give the voice cue, leave your name and number, your client's name and number, and a date and time you want us to get the interview done. We will outbound call your client, get the interview done, and then call you back again with the underwriting decision. We're not going to give that to the client. We're going to give it to you, and you're the one that's going to communicate it. If you call during normal hours, we get it done all at the same time while you're on the phone. Life is good. So 2 last things, Adam, before I think we're going to keep it tight today to the time, obviously, is pre-qualifying your app. We have an app for each of these products. So for Generation Legacy, because we have 1 tier of underwriting, standards to table 4, we have a Part A of medical questions. You basically, think of Part A as knockouts. If you get all no to Part A, you qualify. If you get a yes, you don't. So that's the key thing. They're knockout questions, and that, of course, assumes you're okay on the MIB, drug history, and height and weight. For single premium whole life, because we have 2 tiers of underwriting, standard through table 4 and then table 5 through table 8, we have 2 sets of medical questions, Part A and Part B. Still think of your Part A questions as knockouts. If you get a yes in Part A, it means you don't qualify through 8 tables of underwriting. But if you're all no in Part A and Part B, you qualify essentially for Tier 1. And then, of course, if you get all no in Part A but 1 yes in Part B, you would qualify for Tier 2. This all assumes that you're within the height and weight and MIB and RX standards, okay? So 8 tiers of underwriting isn't bad to get through, and most of your clients are obviously going to qualify. So with that, Adam, what I'll say here is that, we're obviously short on time today. I will tell you, as I've referenced it visually several times today, that out on our agent website, we have a product toolkit. This is a visual of it, the home page. Each of these product toolkits are set up for you as you're contracted with us. So if you're contracted for single premium whole life and Generation Legacy, you'll see 2 toolkits. In those toolkits, you really find everything you need to market and sell us. Go out there and take a look, and I think you'll enjoy what you see. The other thing that I will plug real quickly, Adam, in the last minute is our Aruba trip. We have a great agent conference coming up next year in June to Aruba. Let's see if I can get that on the screen for you. And the Aruba trip is at the Marriott Resort, Stellaris, and the Stellaris Casino, June 5th through the 9th. You and a guest, all expenses paid. And all you need to qualify is $600,000 in premium. So that's a very low qualifying amount for a trip like this for you and a guest. We're all about fun and pleasure. We don't get into business meetings. So I think you're going to really have a great time. Join us, please, next year in Aruba. And again, $600,000 gets you there. So with that, Adam, boy, your trip down to the Ritz in Naples looks phenomenal. Man, that's a great trip. Love to be there, and I know many of you will be. So thanks so much for your business. We really appreciate you considering Baltimore Life for your business.
Likewise.
Adam?
Gary, thank you so much. And $600,000 to qualify for Aruba. That's incredible. You qualify for our trip. More than likely, you're going to qualify for Aruba with Baltimore Life if you write that Baltimore Life. So certainly no reason not to. Very competitive products. Thank you very much for taking us through that, Gary. Baltimore Life been a great company to work with here at IAMS. I do a lot of business with Baltimore. Very competitive products, especially with that Generation Legacy niche, but can really fit a lot of scenarios out there for clients that you're working with those leave behind monies not needed for future income. So I appreciate all the time, everyone. We are at our time, so I'm going to go ahead and wrap things up here and be respectful of everybody's time you've given us here. But thank you so much for joining us here today. I will be following up with everyone following the webinar. Just check and see if there are any questions that I could answer and see if there's any cases that may have come to mind as Gary was walking through those products that we could quote for you and assist you with from a case design perspective and get you on your way to qualifying for Aruba and for Naples. So with that, Gary, thank you once more, and I will be in touch with everyone. Have a great rest of your Friday and a great weekend. Take care.